Welcome to the Krinzman Property Playbook, where we dive deep into the heart of South Florida's real estate scene. I'm your host, Matthew Krinzman, here to guide you through the strategies, insights, and community connections that make buying and selling real estate a science. If you're looking to move beyond the basics, build trusted relationships, and grow your understanding of this competitive market, you're in the right place. Every episode, I'll be bringing on local pros, from attorneys to contractors, to give you the inside scoop on what it really takes to succeed in real estate. So whether you're an investor, buyer, or just curious about the market, let's kick things off and get you one step closer to your real estate goals. Welcome to the Playbook. My name is Matthew Krinzman. I'm a real estate broker associate here in Miami, South Florida. I'm with One Sotheby's International Realty. I've been doing this for way too long, at this point in my life. My whole idea of the podcast was to help spread knowledge and help people out there, especially because in real estate, there's so many different things we can do, right? I'm a residential broker at the end of the day. Yep. I sell homes, I sell condos, love what I do. But people, like once in a while I'll sell a duplex, a fourplex, some commercial property here and there because I can dip my toe in it. It's kind of fun to do. Yeah. And I always have those buyers after years, like, hey, I want to buy and I want to invest. But I think what it is that within real estate, just like the stock market or equities markets, there's so many different ways to deploy your money or invest your money. Either you want a little safety or you're willing to take on risk. There's so many different ways of doing it. So, my podcast is idea is to do that. That's why we call it the Krinzman Property Playbook. I like it. Yeah. I mean, it's like, playing on sports at the same time, right? Right. I think we want to give strategies, want to help people learn from others, professionals like yourself, even though you're not in South Florida, but you're in Texas. But I think what you do can definitely help.
Absolutely.
And educate everyone around the country.
And let them know what's out there. Let them know the options, because a lot of people don't know. And I've had people buy mortgage notes from me from here to Thailand, and it's not made up. I literally got a guy who buys them and he lives in Thailand. And so
that's great.
It's South Florida is easy, right?
Yeah. So just tell us a little bit how you got into this, why, what was the why, and what's your why, why you do this?
Absolutely. So I got started, it's not that different from a lot of people. You have your 9-to-5 job, but you want more, something that's extra, something. And I think it started with wanting a little bit more. I'm a big believer in real estate. Real estate is an investment, and it's something that you can or you cannot fully commit to that. That doesn't have to be your primary source when you start. And so I started my first house, Corpus Christi, Texas, and I rehabbed it myself. This is not a good business plan for anybody out there. It's not a way to scale, but it's what I did. And then moved into rental properties, flipping houses, and wholesales, or just assigning contracts. And they kind of all went at the same time. But now the focus of my business is we sell our homes with owner financing. So we buy them, we will rehab them, we'll sell them. But when we sell them, we will sell them. Someone will give us a down payment and we'll create a mortgage note, just like a bank when they bought it. But what we're looking for as cash flow is the monthly payment, principal and interest. So we want to be the bank. And being the bank has significant advantages to being, say, the landlord or the flipper or lots of other things. And for many people, that can be a great fit who want to invest in real estate, want to diversify how they invest, but really don't want to be fully active.
Don't want to be a landlord.
They don't want to be a landlord. I'm a landlord. It's not that much fun.
It's the worst.
Right? I mean,
let's be honest. It's like you get the call at 3:00 in the morning. Oh, my toilet's backed up. Oh, geez. That's the last call you want at 3:00 in the morning.
It's the last thing you want. Yeah. There are advantages as far as wealth building, but also when you're strictly looking at cash flow, being the bank, holding notes, it's the best thing I've ever personally done. And a lot of people don't know how easy it can be for them to invest there. It does require a significant amount of capital to come in. It's probably not, for most people, it's not where they start if they don't have capital. But if you do, and you're looking to invest, really easy for people to jump in, invest in mortgage notes, and create cash flow in real estate without the tenants, the toilets, all the headaches that are going to come with being a landlord.
I guess there's some risk. Over the years, I've been doing this for a long time. I have friends who are in the hard money lending side of this, of the business. And I do a lot of their BPOs or comparative market analysis, because and they'll tell me straight up, look, we can get an appraiser to do it, but you're the real estate agent. The market probably a little bit better than an appraiser would. Nothing against appraisers. I mean, again, you clearly say appraisal is an art form, not necessarily a science. And so I think what real estate agents, if they have the experience on the ground, will know a neighborhood, will know an area. We have the stats, we have comparables. So I do a lot of those BPOs for that, because they always say, hey, look, you're going to be the ones, if we ever have to take these back, you're the one that's going to have to sell it. So, what's the market like? What is what's the sellability? So, I mean, there obviously is some risk involved in this side of the business. I would imagine foreclosure, not paying payments.
There is, right? And there's risk in any side of real estate investing.
Yeah.
What we do is a little different than the hard money loans. So we will finance a long-term mortgage note. We'll do a 15, 20, or 30-year mortgage note. So instead of doing like a hard money loan, which is short-term debt, which may be 6 months, maybe a year, where if they're not in and out on that, we'll do a long-term mortgage. So there's a lot of people they're great folks. They make plenty of money. They would love to pay their bill, but they are not financeable at a regular bank, at a Wells Fargo, something like that. And so we found that niche that works really well for us. And so we sell, what is your standard blue collar home, 3-bed, 1-bath, 3-bed, 2-bath, sometimes a 2-bed, 1-bath.
Sure.
And the majority of the properties we sell and make notes are under 200,000.
Wow.
Right.
Okay. So that's an expensive real estate in reality. Here we have our market's completely different as far as, there's no such thing anymore as that house. Right. You're starting now 600,000 for that house. Right. So obviously, in other areas of this country, like Texas, where you are in San Antonio, obviously there's a lot more opportunity to buy those type of homes still.
Absolutely. And so when you have a property like that you can sell to somebody who is a really great borrower, they just don't fit the standard paper model where they're going to get a loan from Wells Fargo.
Right.
And we found our niche in that market of 200,000 below, and we can set them up for success. And then if we're looking to create a system where the mortgage payments just come in month after month. Well, that for someone, so let's say somebody in your neighborhood wants to invest there, and they're like, well, I've got $600,000. And you're like, well, you're going to need at least that to get in and buy it. Here, another option, which people, if they just know their options, they can make the best choice for them. Another option, they could buy 3-4 mortgage notes that I've created here in San Antonio that at that price point are probably going to be a little over $1,400 a piece, and that's principal and interest return. That is actually cash flow. So 1,400 times 4, you could see where that investment may be better for some people here that want to be really passive and are happy to be passive for long-term cash flow.
It's a bond. It's almost like clipping a coupon for a bond in a way, right?
You could definitely relate it to that. Absolutely. Yeah.
Interesting. So when you're doing the seller finance on these homes, what kind of down payment are you taking from the buyers?
Great question.
What's the down payment structure on that?
Yeah. So we want a financial commitment from, most of the time they commit about $25,000 total. So let's say it's a $180,000 house, $25,000. It ends up being about 10%. It does vary, by between clients, but it ends up being about 10%. But when I say 25,000, that's their down payment. Plus everybody has to have prepaid escrows. Plus they have to have their closing costs. Yeah. So it's a big financial commitment, but that's also how it's also one of the ways we weed out some people who may not be ready or might not be successful, because we took people with $2,000 down. They really are less committed to the property than somebody who has saved 25,000.
Yeah, no, they committed to it. They're going to do everything possible to make sure that payment is made on time, because they put a lot of money. I mean, look, $25,000, $25,000. I don't care who you are. It's still money, right? And they're making their own financial commitment to the purchase, to obtain the mortgage, that they were not able, obviously, to go to Wells Fargo for whatever reason, and that happens. I mean, there's no, hey, look, but you are providing an opportunity for someone to become a homeowner, which is, I think, what we all want, especially for those of us in real estate and the residential side. That's what we want. We want people to own homes. We want them to be happy. We want them to set roots and things like that. So you're actually really providing a great opportunity for these buyers who could not normally get in the traditional way.
Yeah, absolutely. That's what we're doing. And there's some misconception around people think, oh, they must have some terrible credit. Well, no, we don't do bad credit.
Right.
But we do no credit. There's a lot of people in this country who don't have established credit. We have some, the credit score may say NA. I mean, but the person makes a lot of money. They don't have any debt. We have many that are dual income households, and the only fixed debt they have is going to be our mortgage payment.
Interesting.
They paid cash for the vehicle. They don't use credit cards. And so when you look at that person is not going to go to Bank of America and get a mortgage. It's not going to work for them. But man, you look at it, it might make a whole lot of sense as an investor. That's somebody that I would be willing to bank on as opposed to, some other options.
Are there any regulatory issues that you have as when you're doing the owner finance? Is there
Absolutely. So there's lots of rules that we have to follow, but the rules that are in place are really good, and they're not that hard to follow as you're setting up the mortgages. You just have to know what they are and who to work with. And so if you do more than 3 or more in a calendar year, you have to have a different set of rules. Now, we obviously do that, so we follow all the rules. Now, one thing that we also able to do is we have a licensed RMLO who is going to, we're going to submit all the documents to them. They are great. They are licensed, definitely in Texas, a couple other states. They may even have a federal license. Don't quote me on that. I'm not positive. But they are by the book. There is no gray area, and I love it about them. They specialize in owner finance, and they make sure everything is covered. We send initial disclosures to our borrowers. We have final disclosures to the borrowers, just like you would see on somebody who's getting a mortgage on yours. We have to qualify them. We have to check their debt to incomes. Everything is documented, and having the right RMLO really helps us with that process. And then we make everybody close at title company. They have to run through a third-party servicer. We have a lot of pieces in place. Yes, they protect us. Yes, they protect our investors, but they also protect the borrower. And so we know we did everything the right way, and that there's no gray area for us. We're not interested.
So you have the typical disclosures that you have to I guess it was from Wells. We keep on using Wells Fargo as an example.
Yeah, we use it because it's huge, right?
Yeah, I personally would not. They're fine. I hope Wells Fargo's not listening in, but
they're probably not. But yeah, I'm not using them either.
Those of us in the real estate, especially on the residential side, we know that they're not easy to deal with. Even when a person is a really qualified buyer, they make it beyond difficult.
Right. But so the RMLO works really well with our title company, but they'll send and they have to sign their initial disclosures, which, hey, this is what the cost of the loan is. Here's your cost. Here's your closing costs. Here's all the costs involved. And then there'll be final disclosures again that are really similar, but these are actually your final numbers. And so everybody has to sign off on those. They have to close at title, and then we run everyone through a third-party servicer once they have purchased the home. We're not going to go around and collecting payments. Our investors are not going to go around collecting payments, right? But the other advantage is this company specializes in servicing these types of mortgages. And so there's no, oh, I paid you, Nick. No, I didn't pay you. There's no back and forth. No one pays me, right? You have to pay the third-party company.
Right.
They will hold the escrows for taxes, for insurance, and then they will send us our principal and interest. So for us, for the investor, it takes a big piece of that collections, documentation, all that kind of off the table.
Interesting. What's your typical, the typical interest rate on these
Typically, we're at 10.9.
10.9. Are there are there points up front, or that the buyer or the mortgagee is taking on?
No, we don't charge them. We don't charge them points up front. 10.9 is what we found right now to be a win for everybody. Is it the lowest interest rate possible? No, absolutely not. But we are willing to finance a home to them, and no one else is.
Right.
And it also has to work for us as an investment. If somebody wants to come purchase a note, if it's at 7%, it's not as great for that end buyer who may buy the note from us as a 10.9. They're like, man, a fixed 10.9 is pretty good for a lot of folks. And if we try not to go much higher, because if we went too much higher, that's just going to put more pressure on our borrower. And we don't want to do that because we want a successful long-term note, not one that we have a lot of extra stress on the borrower. And 10.9 is pretty good. We're doing all right. So
No, look, that's right now. That's kind of what you're looking at, hard money. That's the typical type of deal. Even then, but they require a lot more equity up front too.
a lot more equity
to
up
get
front.
the-
They're almost certainly going to charge some points up
Oh
front,
yeah,
and they're going to be short term. Where if somebody can't refinance out of that,
Mhm.
they would be in trouble. Where we will allow them to refinance. We don't put
Yeah.
a prepayment penalty or anything, but they don't have to.
Right.
Right.
That's actually what you just touched on, the refinance thing was actually something I was going to ask is like, are there prepayment penalties? If someone wanted to get out, refinance after a year or 6 months or 2 years, do you have those type of penalties involved, on the notes?
We don't.
Okay. Right.
If they're successful and they're able to get refinanced at something that's better for them, hey, we're happy for them. It's not a
Mhm.
problem. And we're not going to put a prepayment penalty. If they had to sell it for some reason, after 2, 3, 4, 5 years, we're not going to penalize them for it. We're still going to get cashed out, and we'll just take that money and we'll make another one. And everybody's still coming out ahead in that.
On the notes, is there an option for interest only, or is it always principal and interest?
It's always principal and interest. Yeah. So it's going to be amortized over the length of the loan, 15, 20, 30. A lot of people do the 30, even if they could qualify for one that's a little shorter. And then if they want to pay it down sooner, they can make extra.
Oh yeah,
payment.
God. And you can do double up payments, like if they want to accelerate their payments, they can do that.
Yep. We teach them all.
Alrighty.
We show them all how to do it.
So you're teaching these buyers how to manage their money, essentially.
Well, we teach them
way.
what we know because we can show them that we know nobody else is going to. And as the investor, if somebody makes extra payments, it doesn't hurt us. It doesn't hurt
Right.
us at all. All we did is get more capital back faster,
Sure.
and it helps them. This is not a downside for anybody, so we'll show them how to do that. Some of them will do it when they say, get a bonus, or if they're
Mhm.
contractors, they have a big job, and they'll
Right.
make a lump sum payment or whatever works for them. We'll teach them how to get a homestead exemption on it for taxes, all the things that probably nobody else will show them. And then, of course, it's on them to execute. But yeah.
I mean, you're providing a service in a way, not just to obviously to the investors, but you're providing a service to these buyers who, like you said, who normally would not be able to qualify in normal circumstances. But, I think the educational part, helping them is, look, we all know the truth of the matter is real estate has been the greatest generator of wealth
Yes.
ever. You can invest all your money into stocks, cryptocurrency, do whatever you want. God bless you. Have fun with it. But I think there's a way to balance your investments or how to create your own wealth or provide for a future, set yourself up for a future or your family for a future. Real estate's really been the way.
Absolutely. And I'm a firm believer that real estate is the best way for the common person to really
Absolutely.
grow their wealth, become
Absolutely.
a millionaire, all of that. And it's proven. It's happened time after time. It happened to me, it's a real true story. And so I do feel like we help a lot of families, and, we're fortunate. We're investors, so we do profit from it.
Sure.
I'm not ashamed of that at all, but you can create a win, and, both sides are great. We're really proud of both sides.
So we touched about, like why versus, someone owning rental property, because there's benefit not having to be the landlord. But
sure.
Is there any misconceptions or hurdles that, if I'm an investor coming to you and say, hey, Nick, I'm interested, but what's the, I hear all the downsides and all these things like to come with it. I'm not so sure, but how do I, get over that hump, of investing in notes?
Just know where you're at, know how that note, the biggest thing is, okay, how is that note created? And then who is the borrower on that note? I would say that is even more important than the collateral associated with it, because, the house is going to be collateral until the note's paid off. Who created that note? And then who is the borrower associated with that note and their ability to pay? Because most people that are doing this, they want to set it up and want it to be long-term. And we've made mistakes just like everybody else, but I've been doing it a very long time, and we've learned from a lot of them and things we don't do anymore. So when you can set people as homeowners up for success, it trickles down to the investor, and people get really worried about how hard it's going to be for this or that. If anybody wants to work with us, we're happy to support you throughout your investment. It's part of what we do. You're not bothering us. You can call us anytime. We will help you. It's not that hard to remedy. And as the bank, you put yourself in a really good spot really quickly, because you bought the note from me. Okay, 10% down, so your collateral is worth, more than whatever your note balance is, right? Depending on that particular note. But then very quickly you start recouping payments, but those payments are it's amortization schedule. You've looked at them. We've all looked at them. But as the investor, you're collecting mainly interest up front. So you're
Right.
starting to collect a lot of this capital back, which every time you collect a payment puts you in a more secure position overall, because what you have, your return of capital, right? But you're also owed a certain amount of money because the principal is not paid down at the
Right.
same rate that the interest is.
Mhm.
So you put yourself in a really good spot and you look at the overall picture. All right, I'm a year, 2 years in. We have a very low default rate. I will say that, but nothing is perfect. And if you
Of
did,
course.
but after a couple of years on, say, $150,000 note, you've probably got, without pulling out the calculator, $35,000 back.
Yeah.
And so now your total investment, your net investment, I guess I would say, that's in there is a lot less. It's very rare, but so people feel better. To foreclose in Texas is not difficult.
Was it a judicial foreclosure in
Mm-mm.
Texas? How they do it there?
So so you don't have to go through the court system. So
Even better. Wow.
Yeah, so you hire an attorney. Happy to refer you to any some people that we use, but that's what they do. That's what they specialize in. So you're going to send them an email, say, hey, here's my information. I haven't been paid, etc. You have the note servicer who can say, hey, we don't have any of these payments. Here's
Right.
the pay schedule. You're going to send that to them. You're going to let them handle it. You are not coming down to the courthouse in San Antonio to foreclose. I don't do it. You're not going
That's
to do
good.
it.
Yeah.
Right?
That's so much easier. Jeez.
Yeah. And
What's
most
it? Yeah. Sorry. Go on.
No, you're good. And most
Yeah.
of the time, if you even get to the point of the attorney, when they get that big packet from the attorney, they're going to be like, hey, okay, my bad. They'll either catch up on the payments or you can find another remedy.
Yeah.
So,
So they could sell the property. There's enough equity in the deal and for them to sell. They can sell, and everyone's made whole at the end of the day. Which is great. That's one way. I mean, especially in today's market. I mean, I would assume that San Antonio's had some really good equity appreciation over the last few years, and I'm sure it's maintained somewhat. So if someone's in a position to sell, and their note's like 150,000 left, and the place is worth 200. Well, all right, sell it. You're done.
And we'll tell them, yeah, cool. Hey, go sell it. It's not a problem. That's perfectly fine because as the investor, you're going to get cashed out. If it does go to auction and it sells at auction, then you still, as the investor, get cashed out.
Yeah, it's win in that situation. It's the only thing is you have a time period where you're not gaining a payment, but okay, you'll catch up at some point.
You're going to catch up. Yes. Yeah. If this is something where your life will stop if you don't get one payment on 1 month,
you should not be investing.
For you. I would not advise that you do this. These should be thought of as long-term investments, and that's how.
Yeah, when we talk about hard money, the people that I know in the business, the hard money, they get their money from investors, as well, and and they always tell me, look, we will not take an investor on if it's the last, if it's 500,000, that's all they have. We will not do it because what if the guy defaults? Then we're getting calls all day like, hey, I need the money. But it's again, a part of a whole of how you invest your money.
Absolutely. And if it's $150,000 mortgage note and all you have is 150 total, I would advise you not to do that. That's not right. But there's a lot of people who, maybe they've only known stocks or mutual funds and things like that. And now they have $1 million there and they're like, wait a minute, all my money is sitting here.
Right.
Is that the best choice? That's up to you, right?
Diversification.
But here's something that, it is not dependent on the stock market where you can really see some returns. How would that fit for you? That's up to the investor, but they need to know what's out there.
Yeah, it's just another part of how you should diversify your money. You can use, I'm assuming you probably have people who use IRA money to do this.
It's a great fit, especially for the self-directed IRA, because they put it in there, gross tax-free. A lot of people use that.
Which is something we don't talk about enough in this business, the use of the IRA for real estate investing.
Especially for people that are self-employed and things like that. They don't have these different 401ks and such.
Right.
And they're looking to plan for retirement. The self-directed IRA, I'm not affiliated with anybody that has it, but it is a great tool. And I have seen it work. And I have seen it where people, put all on the real estate side have been very successful.
So when an investor comes to you and says, hey, Nick, I got $200,000 kicking around that I can invest in, what kind of can you tailor the investment for that investor, or or is it just like, here, this is the note, you want to buy it or not, or is there something else like you can package for them?
So we do have a few options for investors. We have a short-term option. Most people go away from it pretty quick because we do specialize in long-term investments. But when we purchase properties, we will use short-term capital.
Okay.
If somebody wants to do that, we are not going to pay you hard money rates. I would just lay that out there. I don't need to. I'm not going to. But we can definitely make you a good return on your money. And then the other thing is the note value is the note, and they're all going to be a little bit different, but we can get pretty close. So if you called me today and said, hey, I'd like to buy a note, I'm looking for X, Y, and Z, and we use a $150,000 example just because it's easy, I could tell you the next two that we have, but we produce them every month. So I have a 129 coming and a 138, and one that's probably right behind that's in that 147. So yes, we would try to fit the best person with it, because some people may only want to invest 130, and somebody may be like, hey, this happens a lot too. I have 170. I don't want to buy a 150 because then I have 20 left. Can you get me one that's closer to like 168? And that, because they don't want it just sitting there. And so we can fit pretty close. Being exact, I don't think anybody expects that, but it's not going to happen either.
What's your typical deal flow on a monthly basis?
So we usually create 4 to 6 notes per month.
Okay, and solid. Wow.
Yeah, been doing a while, and it varies, but that's about where we average out at. And then we have other deals. So we market a lot for single family homes that need repair here. So we'll have other things that not every house fits the seller finance model. We bought a $400,000 house last month. That would not fit well for us to owner finance that at 10.9 because that payment, I don't know what it would be.
Be crazy. It'd be a lot. I mean, just interest on that would be, you're looking at almost $44,000 a year just on interest.
Yeah. So that one, we end up selling that one, just on the retail.
So you're flipping it. That's a flip.
Yeah. It's still a good deal, right? Yeah. We're not going to pass it up, but, and so we have a couple of those mixed in there. And then there's some that for other reasons wouldn't fit. So we will buy and just sell those.
Got it.
Yeah. That's our typical deal flow.
Do you package notes at all? Do you ever say, here, we're going to take a group of 5 or 6 and so we're going to sell them off? Do you ever do that?
If somebody wants it, right, we will. I would want to talk to them and know that they're actually committed. But if they said, hey, I just want to wait and I want a package, I want it to look like this, sure, it's not a problem. I can put it together pretty close.
Wow.
What
if I'm a note holder and I have a $150K note on one of your properties, and I say, you know what, Nick, I need to get out. I need to get out of this deal. I need to, how can I get out of, I don't want to hold this note anymore. Is there a way out for that investor?
There is. So they can resell it, right? Okay. They can resell it to someone else on the other market. They don't have our same business and network. It is, that doesn't happen a lot, but I mean, also I'm a person, right? If you call me up and you're stuck and we're going to find a way to help you.
Sure.
And the good thing about one thing that about kind of like we talked about earlier with notes, if it's $150,000 after the first 2 years, you've already got 30 something thousand back. So even if you did have to discount a little bit to sell it, are you really losing? You're not. You got $30,000.
Yeah, you can probably take a 10% cut on the deal.
So there is a market, and if you don't know that, we're pretty comfortable in that space. And be happy to try to point you in the right direction, or because any investor, the more you do to help them, the more they're going to come back when they're ready again, and the more they're going to tell their friends, "Hey, man,
because this happened. Yeah.
He didn't even have to, and he did this."
Right,
well, that's a pretty good. It's pretty good marketing for us. So,
you ever get any this comes across my emails a lot, which I kind of just don't pay attention anyway. But it's like non-performing notes and things like that. Where people are trying to offload those and sell those? Do you get into that, or is that
not? That's not our specialty, right? Not that I haven't ever. There are people who approach us, hey, this is a bad deal all around. We made this note, but we also have to look into, we didn't make it, right? Who made it? How was it made? And there's a lot of pieces that go to it. And who's their borrower again, right? Who made it? Who's the borrower? And so
the asset itself too.
And the asset itself. Yeah. And so, yes, we would be willing to look at those for us buying them. I would not help or be interested in reselling those to an investor because there's too many things that we don't know about it. And I feel like there'd be too much risk for that person.
Understood. Just trying to think. we've talked about a little bit about the risk. Obviously, the risk is
Sure.
you can minimize it because you have the asset, and then you do the foreclosure and you get the property back. Whatever, that works. We touched on it a little bit, but why this over rentals, or why is a mix?
It's a great question, and the reason that you would do this is it's way more passive. Anybody that tells you that being a landlord is passive income is not a landlord, because that is not passive. It's way more passive. It's much more predictable. I'm a landlord, right? And I'm not against being a landlord, but it does a certain thing. Notes do a different thing. And I think a lot of people really want that passive monthly cash flow. They just don't know that they can use notes to do it, and they think they have to do rental property. So what would I tell somebody? If you're looking for cash flow, the notes typically are going to win over your rental property. They do in our portfolio because we don't have repairs. We don't have real estate taxes. We don't have the insurance that we have to get.
Right.
We're the bank, right? I got a principal and interest payment. It's written down how much it is, which makes it very predictable, or I would say more predictable than rental property, because it's not something changing every month. We don't have the vacancy turnover factor that you have as a landlord, where
Sure.
if you got one property, it was vacant, you had to release it. Yes, you lost a month of rent, but you also had to do a make ready on there, which is thousands of dollars. So
time down,
time down and money out, where you don't see that as much. And so that is where we see people really like notes that want to be invested in real estate. They know real estate's a good investment, but they want to be passive and more predictable.
Right. Like we talked about that earlier. You don't want to get the phone call 3 o'clock in the morning.
I don't.
My toilet's backed up. Then it reminds me of something my brothers told me a long time ago when they got out of the residential side. And they got, that was the reason. And then they got into the warehouse. And they're like, well, no one's ever calling us at 3 o'clock in the morning on a warehouse. Like, sorry, call the plumber. That's that's the benefit of, I guess, having a triple net or type of deal.
Something like that. Sure.
In that case. So me as an investor, like, who's your worst? You're like, no, I'm not you. I'm not taking you on. What's that investor profile or that person?
I'm happy to have a conversation with anybody that wants to reach out to me, even if you don't want to invest, you just think you might, or you want to learn more about it, positives, less positives. I'm more than happy. Please reach out.
Yeah.
The person who it's the only money they have to invest, and the last money, it's not, I really would like to steer away from that person, because maybe this isn't quite the best fit for them. And then the person who doesn't want to be passive. I've run into this. Guys that bought notes they're like, I drive by the house every week.
I can imagine.
What are you going to do? Right? You can't, you're the bank. You don't, well, I drive by the house, and should we have them do? No, it's not your house, right? This is your collateral.
Yeah.
And sure, you can go by, but you don't get to tell them what to do. Like, they want to be active, or they want to go fix something, or they want to swing a hammer. That's not this. And there's other choices they can make. And be happy to steer them in that direction. But those ones don't tend to be a great fit.
Yeah, I would. Yeah, because they might as well be a landlord at that point.
They might as well.
Yeah, I've heard those stories also from other people, investors, and things like that. Like, well, just relax. Just you
get paid, right? We want a return on investment.
Like, you get a check, right, every month. Yeah. Okay, then. Be quiet.
Not much else you can do. Like,
it's okay. It's gonna be all right. Yeah, don't worry about it. So, we talked about. I mean, do you go to private lenders at all to get for your for your notes, or to invest with you, or is that just you?
We mostly work with individuals. Yeah, I mean, we have some banking relationships that we use, especially on the purchase side, some lines of credit, and we're able to do some different financing things with them just because of our relationship that help with the business. But most of the people that invest with us are not real estate investors. They want to be very passive. A lot of people that own their own business, or other high income earners, doctors, lawyers, people that make a lot of money, and this is where they're going to make their money, is their primary profession. And then how do they invest that? And they'd like it to be invested in real estate, but passive. Those tend to be the majority of the people that choose to invest with us.
You mentioned when we first were starting to chat, you have someone from Thailand who invests heavily with you guys. How did he find you?
He found me on the internet.
Really? Wow.
And called me up, and he's like, it's an awesome guy. I've never even Zoomed with him, but he's like, hey, no, he understood notes from the first phone call. And he's like, hey, here's exactly what I'm looking for. And I'm like, okay, I have this, and it fit for him. and he was an experienced investor already, but he's like, hey, I'm not coming by the office. I'm not coming there, but he wired his money. We set him up. And I talk to him every 6 months or so. Really neat guy. But it's something you can invest in from anywhere. I mean, we have people, Thailand is more the extreme example, a ton in Texas, California, all over the, different parts of the US. So you don't need to be here with me in San Antonio, because most of the time that's not going to be a huge advantage for you to be here.
Is there any know your client type of information, like when someone's investing, you have to go through with them, for regulatory reasons or OFAC or things like that?
So, we are very much looking at starting a fund where people can invest and diversify over a huge portfolio of notes. And if we do that, then yes, then we will have to qualify folks. For them just to purchase a note from us or multiple notes from us, no, we don't have to qualify them their way. That's their money. That's their choice of how they'd like to invest it.
But if you go to if you start a fund, then you have a whole different.
We start a fund, then we have a whole series of things, and definitely thinking about doing. There's advantages to both sides, but not at this time.
No, this is great information. Like I said, I knew, on the periphery about the notes. I mean, because I've been in the business, you hear about, about it. I have people, friends who are mostly in the hard money lending side. So I understand that, they have investors, they have a mortgage, their first position most of the time. Rarely do they ever take a second position, because that's on a hard money. I mean, I don't know. That seems not smart, because someone defaults.
Seems very risky.
Yeah, it's very. But then again, I guess you charge a much higher interest rate for that at that point. So you accept the risk, I suppose.
Yes.
I knew about it, but never really knew. You always hear about the investing in notes. You always think about kind of you go back to 2008, right? That the financial crisis where these banks or these lenders were taking these notes and bundling them up and selling them in such exotic ways and leveraging and arbitrage, and which got us into a big mess eventually. Unfortunately, and those of us came out of it great, and those who did not, well, that's the nature of the business. But I don't think people will understand. It's I can actually call up Nick and say, hey, I got 100. I want to diversify my investments. I got $200,000 kicking around that I can afford to invest. I want to buy a note. I want to come in with you, in a house. I don't think people really think of that necessarily. I mean, it's a niche, right? It is. Yeah.
They don't typically think about it. And a lot of people will say, well, I don't understand mortgage or mortgage notes.
No.
And you don't
have one, but I don't know it
as well as me. But you are, I will tell you, most people are somehow in the mortgage note business. They're typically just paying interest instead of receiving it.
Right, exactly.
They're completely willing to sign up and make interest payments for 30 years, but they won't collect them. And I'm like, well, hang on, wait a minute. What if you just look at the other side? And it that tends to simplify it for folks. And then they're like, oh, okay, this actually does make a lot of sense for me. I can follow, and it doesn't have to be overly complicated, and it's a great option for a lot of people.
Yeah, I just don't think. I'm trying to think when it's ever come up in conversation for me. With a client or an investor. Only the investors I meet are the ones who are doing hard money, so I understand. They understand it. Mm-hmm. But I never rarely is I don't think I've ever had a conversation with my friends about, saying, hey, you own this fourplex, great, but here's another, let's, put some money, invest in a note or something. I don't think that's never come up in conversation, which I'm glad I'm having this conversation with you today, because now I can actually kind of add it to the tool belt and say, hey, here's something for you guys.
The more options that people have that they know about, the better choice they can make for themselves. And while most people, I mean, I do, but I'm the exception. I have conversations about it every day. People would say, oh, I have this, but I bet they do have this conversation with you. Oh, no, I do not want to be a landlord anymore. Yeah, real estate, great. It's a great investment, 100%. But I do not want rental property. Well, that conversation, if they knew about notes, it's an option for them, and that may transition there, because that conversation happens a lot. They just, none of us, we don't know what we don't know. There's lots of stuff I don't know about, but this I just happen to know about.
Yeah. You built yourself a business based on it. You found oh, here's an avenue. Yep. This is the way I can make some money for myself and my family, but also I can help others invest and make money.
It's exactly what we do.
Which is, again, when we talked about this, real estate can create generational wealth, and this is just another facet to it where it just people don't know about it. I mean, obviously there's a big group of people who know. I mean, but it's kind of it's a small group. You know, it's big in that there's a lot of guys that doing it, men and women who are in it, but the average Joe would never know about this.
Would not think about it and hasn't been introduced to it. But
right.
the more people we can let know, and they'll decide if it's a good fit for them.
Yeah, I mean, look, it's better than going and playing the slot machine at the New York Stock Exchange every day or on Robinhood. Look, which I do because that's part of my investment strategy. It's something that I'm willing to risk. I am not risk adverse, but this, if I, hey, I got a couple of $100,000 laying around, maybe this is a better way to secure my, because as you get closer to retirement age, also I think this is something people should think about. Risk is fine, but then you want some low risk,
right?
Like
Absolutely.
bonds, like we talked about,
right? And what I've seen people also be successful is, okay, they invested their $150,000, 10.9, that $1,416 or so that comes every month. It's not like equity it's not in the stock market. It comes into your account. You can go to the grocery store. You can make your truck payment.
Car bill. Yeah.
You could do whatever you like. It's actual money that comes in.
Or pay your own mortgage with it.
I've seen it.
It's one way of doing it.
Yeah. It's this much money. It comes in. How would that fit? Well, you could see where actually having the money come in could help a lot of people. So
right. And I also, what we touched upon, a self-directed IRA, where that money is going back in. It's, and that's for your future, you're building up on that as well, which again, like I said, not enough people talk about that side, I think. And
I agree.
The more that they start talking about it, one of my brothers introduced me to it a long time ago. He says, hey, you can use your IRA. You can find people who have enough money in their IRA to self-direct and invest in real estate. I'm like, you can't, again, these are things they don't teach you this in real estate school necessarily.
No, they don't. And it's not in an everyday conversation. You have to go out, you have to find it. We have to talk about it and let people know. I didn't know about IRAs for the first self-directed IRAs for investing in real estate, probably first half of my career.
Yeah, easily. Same here.
But I know a lot of people that use them now, very successful. So.
All right, great. So Nick, just to wrap up.
Yes, sir.
How does the average person on the street find you? Where can they find, hey, Nick Disney, I want to, I'm interested in notes. I want to get involved. I want to find out more. How do they get with you?
So, absolutely. So easiest, send me an email, Nick, Nick and sellmysanantoniohouse.com. And you can put in the show notes. So that one's easy.
Yeah. I'll
even give you my cell phone. It's area code 281-615-7007. I'm pretty laid back. If you want to set up a quick call me, shoot me a text. Hey, I'd like to learn some. Can we set up a time? And I'm happy to set it up, talk through it. Even if we come up that it's not a good fit for you.
Right. It's the only way you're going to find out. You have to talk about it.
We have to have the discussion. So I'm happy to do it. Anybody who wants to reach out to me, more than happy to talk with you.
How about you reach any social media, Instagram,
real estate Nick, _Nick, and then the number 1. We're on there a lot. We put out a fair amount of content there. Talks about notes, talks about our houses that we're going through. You can see a lot of, the properties that we're working on there. So that's another good way. And even if you just want to jump on there and see how we see things and look at our business.
Great. And do you have a podcast of your own that you?
I do not have a podcast of my own. I apprate you having me on. I've really enjoyed talking with you, man.
Yeah, no, this was great. This was great for me. As a real estate agent, out here, even though we're in different states, but we want people who are watching or listening to this to understand that you don't have, just because you live in one place doesn't mean you can't invest in real estate in other places in the country. Or Absolutely. Different vehicles to do that. And I think, if you, like I said, if you don't want to be a landlord, you don't want to buy a house in San Antonio and have to rely on some property manager to collect your rent or whatever it is, or anywhere else in the country, mortgage notes is a great vehicle, passive way to do it. No fuss, no muss really in reality. It's just, hey, check comes in, however you decide to get paid, and it's there, and it's use the money as any way you see fit to use it for yourself as an investment, and that's what I think is the key, understanding that I don't have to own the physical real estate.
You don't have to own it. You do not have to own the property at all.
All right. Well, so Nick, it was great having you. I really appreciate your time. That's it for today's episode of the Krinzman Property Playbook. I hope you've gained some valuable insights and feel inspired to take your next steps in the real estate game. If you're ready to make a move or need expert guidance, let's connect. Whether you're buying, selling, or looking to invest, I'm here to help you navigate the South Florida market with confidence. You can reach out to me directly through my website or on social media. Let's get the conversation started and make your real estate goals a reality. Thanks for tuning in, and I'll see you next time on the Krinzman Property Playbook.